The game of wealth has a cheat code, and that cheat code is understanding how the tax system works and exactly when to use the rules once the updates takes effect. If you have been hearing about all the new tax updates coming in 2026 and you want to know exactly how they will affect your business, you're in the right place. 2026 is shaping up to be one of the biggest tax reset years we have seen in decades. I work with high-income business owners who are already preparing for these updates right now. And I can tell you the people who understand these changes early are the ones who save the most and feel the least stress. So let's go ahead and break this down. Why is 2026 such a big reset year for taxes? It is the first full year after the big beautiful bill was signed in 2025. Without this bill, a lot of the tax rules from a 2017 Tax Cuts and Jobs Act would have expired or started phasing out. That would have meant reduced tax rate, major deductions, and special provisions quietly disappearing for many business owners. Instead, the big beautiful bill rewrote and extended many of these key items. The 20% QBI deduction is now permanent. Bonus depreciation is restored to 100%. The C-Corporation tax rate stays at 21%, and the SALT cap quadruples. All of that really start to show up in 2026, which is why that year becomes such a major turning point. Business owners making over $1 million in revenue are usually the ones who feel the changes the most, because if you are netting around $200,000 to $400,000 in profit, that layer of profit is where taxes tend to bite the hardest at some of the highest tax rates. Understanding who is affected is just step one. The real opportunity is how you use the 2026 as a planning window instead of letting it sneak up on you. Here's the mindset shift I'm seeing with successful business owners right now. Most business owners think tax planning happens at the end of the year. They rush into December trying to buy equipment, prepay expenses, or spend money just to reduce taxes. But the smart ones are flipping that script completely. They're building stronger financial teams right now, not just relying on a once-a-year tax prepare. That looks like monthly accounting, clean books that are always ready for strategic decisions, and proper tax planning. They're planning at the beginning of the year, not the end. When they plan in January, they can spread deductions across 12 months strategically instead of scrambling to spend money in December. They're also thinking in quarters, not years. A quarterly roadmap with your accountant is far more valuable than a single year-end phone call where there's just really no time left to make changes. They're treating tax planning as part of business strategy, not a separate compliance task. Every major business decision, from hiring to equipment purchases to expansion, has a tax component they are considering upfront. This proactive approach is what separates the business owners who save $50,000 or more a year in taxes from those who pay by that same amount. Now, let us get specific about what is actually locked into law for 2026 and what it means in real dollars. The QBI deductions stay at 20% permanently for most business owners who qualify. And here's the math. If you're making $500,000 in profit, that is a $100,000 deduction, saving you around $30,000 in taxes every single year if you're at about 30% tax rate. Without the big beautiful bill, this was going away completely. Bonus depreciation is restored to 100%. Buy a $75,000 work truck, write off the entire amount this year immediately instead of spreading that deduction over 5 years. This was supposed to drop to 40% before the big beautiful bill was signed. Now it's back to full power. The SALT, state, and local tax cap jumps from $10,000 to $40,000. If you're paying over $40,000 in state and property taxes, that is an extra $30,000 deduction. For business owners in high tax states, this alone is massive. The C-Corp tax rate stay at 21% instead of potentially increasing, so C-Corps keep their competitive advantage. Charitable deduction limits expand, creating more rooms for strategic giving if that is part of your wealth plan. Now, these are not proposals or maybes. This is the law. The opportunity is locked in and waiting for you to use it. So here's your tactical implementation roadmap for 2026. First, reevaluate your business entity in Q1. An S-Corp election can save $25,000 or more in payroll taxes while also maximizing your QBI deduction. But you need to structure it correctly because your salary affects both payroll taxes and your QBI calculation. Second, consider a family management company if you have kids. You can legally hire them and shift up to $15,000 per child from your 37% bracket to their 0% bracket. You can legally hire them and shift up up to $15,000 per child from your 37% bracket to their 0% bracket. But documentation and real work are critical. You want to do this in a way that clearly holds up if anyone ever asks questions. Third, nail down your owner compensation strategy. If your salary is too high, you're overpaying payroll taxes. If it's too low, you risk audit triggers and reduce retirement contribution. There's a sweet spot that optimizes everything, and you want to be intentional about where you land. Fourth, map out your equipment and asset purchases for the full year. With the 100% bonus depreciation, timing really matters. The $100,000 purchase in January gives you 12 months of cash flow benefit from the tax savings instead of waiting until the end of the year. Fifth, review any trust and estate structures you already have in place. The new rules might open opportunities for income shifting or asset protection that you could not use before. And finally, create a real annual plan with 3 scenarios: conservative, expected, and optimistic revenue. Build a tax strategy for each level so you are never surprised and you always know your next move. 2026 gives you one of the biggest opportunities to save on taxes that we have seen in a long time. If you want to understand the 5 specific strategies that help business owners save over $100,000 in taxes while they're also building wealth, this is exactly what I cover in my next video. Click right up here to watch it. It'll show you how top business owners are using these changes to grow faster and keep more of their money instead of sending it all to the IRS.